Okay, so we're almost finished with chapter 2 or 16, depending on which version you have. And now we're going to continue talking about the disposal of that balance in the factory overhead. At the end of the year, you need to close your factory overhead balance. And it depends on whether it's debit or credit. Remember, if it's a debit, it's hold on, let's go to the next slide. I can't remember now. Okay, here we go. If I have an ending debit balance, that means I underapplied it. Here's my journal entry. You need to write this down. This is very important. If the ending balance is debit in my factory overhead at the year end, that means I underapplied. My costs were higher than what I anticipated. And here's the journal entry. Either way, you're going to take it to cost of goods sold. If I have a credit balance, that means I overapplied. I put more in there than my actual costs really were. Here's the journal entry. And if you remember correctly, we had a $150 debit balance. So here is my journal entry to remove the debit balance at the end of the year. You only do this at the end of the year. That's it. Okay, so that concludes how job costing works, and you do need the journal entries to move through the processes in this. Next, we're going to take a look at, during the period, what happened to my other accounts. In particular, I want to talk about the work in process account. And what happened is, during the period, I brought in direct materials cost, I brought in direct labor cost, and then I brought in my applied factory cost using my predetermined overhead rate. So here's an example. Here is my work in process ledger account. It is an inventory account. Normal balance is always debit. And so I started out with $3,000 in there. I brought in the direct materials, the direct labor, and then I brought the factory overhead in. And that brought me to a total of $31,250. So I pull out job number 71 is complete. It gets pulled out as a credit and it'll go to finished goods. And we'll talk about that on the next slide. I'll show you this journal. So job 71 is completed. So the cost of $10,250 go out. And if you look up here, this was job 71. I had a $3,000 balance in here, which was this $3,000 here. I added DM, DL, factory overhead. Here's my total job cost. And then finally, I always take the total cost and divide it by the number of units, so I know what the actual unit cost is. This is extremely important for selling your product. And I'll show you this journal entry on the next slide. Over here, we're not done. These are still in production or WIP. They're not finished. So during the month of December, 71 was completed. Again, you always need to break it down to how much per each item, per guitar. And here's my journal entry to move it out of WIP into finished goods. Okay, now I would sell it straight off the shelf. And when I sell it, the $512.50 is going to be my cost of goods sold per each one. Now, the other job is still sitting in WIP because it's not quite done as of the end of December 31. Okay, so this explains work in process. Let's flip over to finished goods inventory. Okay, this is what you would have learned. This would have been the inventory account in 1A or financial accounting when you were actually selling a product off the shelf. Here is my finished goods ledger account. I had 40 already on the shelf at the beginning of the month. I sold 40 during the month, and then I just brought the 20 pieces in. Okay, so now when I sell these or these, I'll show you the journal entry. This is a journal entry you should have learned in the previous accounting classes. When I'm selling straight out of here, remember, it takes 2 journal entries. So when I sell, here's journal entry number 1 to recognize the sale, and journal entry number 2 to reduce the inventory for the cost. This was a financial accounting or 1A accounting concepts. So this is the journal entry at the end when you actually sell it. Moving along, I just have a few more slides. I'll wrap up quickly. Period costs, we talk about these. You're going to bring them in. They're not manufacturing costs, but they will be brought in during the month. And here's the journal entry for them. These are period costs. And this is really what I want to show you. This is kind of a flow chart for the cost of these guitars and these jobs that we made. And so you just kind of follow along. So this is what I was talking about. I've got materials, sorry, let's not skip over. Materials, WIP, finished goods. So it comes into materials. When it goes out of materials, it goes to WIP. When it finishes WIP, it goes to finished goods. And it goes out of finished goods when I sell it. So this completes this chapter. So this completes our lecture on this chapter of chapter 2 or 16 for job costs. Thank you.